Have you ever looked at the stock market and thought, there are too many companies, where do I even start? What if you could own a tiny piece of hundreds of companies by buying just one thing? In this episode of Diary of Future Billionaire, we are going to break down ETFs in simple language. By the end of this video, you will know what an ETF is, how it works, the main types, and how a beginner like you and me can start using them for long-term investing. ETF stands for Exchange Traded Funds. Ignore this fancy long name for a moment. Just imagine a basket full of different kinds of fruits. So instead of buying every single fruit separately, you buy a basket full of all those fruits all together. In another example, just imagine there are many different stocks in the market, like different shops in the market on that particular street. Instead of walking into every single shop and buying something separately, imagine there is one big folder that holds small pieces of all these shops together. That big folder is like an ETF. An ETF is a fund that holds a collection of investments, usually many different company stocks, sometimes bonds, and sometimes a mix of both. When you buy one share of an ETF, you are not just buying one company. You are buying a tiny slice of everything inside that fund. If you watched my videos on mutual funds and index funds, think of an ETF as a fund that often tracks an index but trades on the stock exchange just like a normal stock. So, how ETFs actually work? ETFs are listed on a stock exchange just like individual company shares. Their prices move up and down throughout the trading day as people buy and sell them. Let's say there is an ETF that holds the biggest companies in your country. When investor buys shares of that ETF, more money flows into the fund and it buys more of those underlying companies. When investor sells, money flows out. You don't have to worry about buying each company one by one. You simply choose the ETF, buy however as many shares as you can afford, and instantly get exposure to the whole group of companies. Most ETFs are designed to follow or track an index. That means their goal is not to beat the market with clever stock picking. Their goal is to copy the performance of a specific market index as closely as possible. Why do so many investors like ETFs? Let's look at some pros and cons. First, the benefits. The first one is diversification. With one ETF, your money is spread across many companies. That means you are less dependent on the success or failure of a single stock. Number two, usually low cost. Many ETFs have low ongoing fee, which means more of your return can stay with you over the long term. Number three is flexibility and transparency. You can buy and sell during market hours, see the price on your screen, and often see the list of holdings very easily. The next one is how it can be riskier. ETFs can be risky because it depends on market volatility. So if the overall market falls, the value of your ETFs can also fall. Second one is overtrading. Because an ETF trades like a stock, it's easy to overtrade, buying and selling too often, chasing short-term moves instead of investing for years. So be careful. And finally, ETFs, very specific or leveraged. So some are very narrow, very complex, or use leverage. Those can be much riskier and are usually not good for complete beginners. So be careful. How a beginner can start. So if you are a beginner and want to use ETFs in a sensible way, there is simple framework. I put 4 steps for you to follow to start trading or buying ETF and putting investment for wealth building. So step 1, be clear about your goal. Are you investing for long-term wealth like 5, 10, 20 years? Or are you trying to trade short-term? Long-term wealth building is where ETFs truly shine. Step 2. Focus on simple broad ETFs. Look for funds that track a well-known broad market index instead of a very narrow sector or complicated product. Step 3. Check a few basic details. What index does this ETF track? What is the annual fee or expense ratio? Is the fund in a currency and market that makes sense for you? Fourth and the last step. Use your broker investing app. Once your account is set up and funded, you choose the ETF, decide how many shares you want, and place a buy order. Many beginners start with a small amount regularly, like monthly, and hold for the long term. This is not personal financial advice, but a simple way to understand how ETFs fit into a long-term investing plan for you. Let's quickly recap what we learned today. An ETF is a fund that holds a basket of investments. Like many different company stocks, you buy and sell it on a stock exchange just like a stock. And instead of owning one company, you get a slice of many at once. ETFs are usually low cost. Give you instant diversification and work best as part of a long-term investing strategy. If you like this video and my plan, in comment section please leave a comment about your plan, how much you are planning to invest, 10, 50, 100 or more. And make sure you watch my videos on mutual funds and index funds to complete the foundation. And in the next episode of Diary of a Future Billionaire, we will build a simple beginner portfolio using only funds, index funds, mutual funds and ETFs together. Next year, starting next year, new year, we will start some of the videos where we will start investing starting from as low as $50 or $100. So please stay tuned and see how the wealth is generated. Thank you very much for watching my videos. Do comments, like and share. Thank you very much.